Okay, great. Well, I think from the polls, I see we're kind of 50-50 side hustle and full hustle, which is great to know. I mean, as you think about venture capital, one note that I got across both the entrepreneurs and the investors that I spoke to before this was it really is important to be fully bought in and committed when you're raising capital, whether that's VC or angel or otherwise. One person put it, fundraising is not um, fundraising is not an accomplishment; it's a liability. I think that there's some gray area in there, but I think the liability piece is important because going back to it changes expectations. You've now taken money from others under the auspices and that you have these outcomes that need to get done. And so when something's a side hustle, the sort of definition of that is optionality and experimentation. And it's very hard to raise outside capital when the goal of that is experimentation. When the goal is sort of objective setting and hitting, it tends to be more aligned. So that's something to think about in terms of venture. However, one of the main messages I wanted to leave was thinking about being a student. How do you leverage that um, in this, like I said, unique time? The full time versus the full hustle versus side hustle, I think is important because one of the other bits of feedback I got from one of the entrepreneurs who didn't go to the VC path but built a great business was that being being able to support yourself financially was a sort of a big consideration. And he found that at the times when he wasn't supporting himself and he had gone full time and taken that risk, he was actually making more nearsighted, short-term decisions, didn't have the same kind of innovation and creativity that he had when he didn't have those financial pressures. So as you think about one of the big questions I asked all of them, because I get this question all the time, is how do you know? When do you go from full time versus, or when do you go from side hustle into full time? Um, and a lot of the comments were definitely more conservative than I think I would have thought. So it was a lot more about get your product out there, use the side hustle, the experimentation to get feedback, all that, doing a much of that customer discovery that you can do uniquely as a student because people are much more willing to answer you and give you honest feedback when you're a student. Doing all of that before you really go full time on something. And even, especially if it's a B2C business or some business where you can kind of work nights and weekends and still be able to produce product that can be sold. And how can you even get enough customers revenue in the door to pay yourself in a way that you might even be making more money than you made in your full-time job? So the closer you can get to all of that before you do make that jump, that's been the recommendation I've gotten from entrepreneurs who have gone that route. And it's tough. I mean, the second line after that was, it was brutal. It was a lot of hours, etc. It's much easier to just leave one job and go to the next and put in the hours that way. But um, they sort of felt like it created the best outcomes for them. Um, the and then yeah, we'll get to the next poll, I guess, and pause. Um, let's see. Yeah, perfect. Okay, let's dive into the second section of this is going to be positioning yourself for investment. So, regardless of VC, how might you go about telling your story in a way that's clear for investors? And I want to be super clear. No, none of this advice should be how to tweak your business or how to change your business or how to set your milestones and goals based on what you think investors like. I don't really recommend that. I think it's more about building your business based off your milestones, chasing your customer, and then figuring out how to tell that story and how to speak in the same language, I guess, and sort of translate what you're doing in a way that makes sense to an investor who doesn't live in your business every day. I think that's kind of what I'm trying to get across here, and not how do you change your business to do what you think investors are wanting you to do. I've gotten a lot of advice from entrepreneurs that is not the route to go down. Okay, I think I need to share my screen here. Okay, great. We got the poll here. Not sure. Awesome. Okay. I think that's fair. And it's probably hard to know for sure either way, but I think that's a good honest assessment. All right, let's see. Share screen. And I'm going to time this to leave room for questions. So again, if you've got some, please throw them in the chat live and I'll come back to them in about 10 minutes. Um, okay, so building a company is about telling a story, and I think that this is important to understand not just for investors, but for customers, employees, partners, regardless of where you are. You're typically telling the story of where your business was and where it's headed and why it matters and what's important and why you should be excited about it and what's the problem you're solving. So telling that story is just great practice, and it's good to have beyond just for investors. We kind of break this down as here might be a great way to outlay how your business works in terms of understanding what you're in every day, day in, day out, 80 hours a week to something this simple is hard. But if you can do this, and it takes time to get it right, this will be the quick and easy way to convey your story to any of those stakeholders. And it kind of sets the stage for how to make a pitch deck as well, which is where we're going next. So value proposition, the team, right? I mean, for us at TechScore Ventures, it's about team, market, and timing. And so understanding in here why you have the team to win, so important. Everybody wants to just tell you what the team is, but I want to know why that's the team that's going to win in this market. Um, uh, Especially when you're a student and an undergrad, some of those things aren't immediately obvious. If you were a three-time founder of a logistics supply chain business and you're doing it again, I can make assumptions on why you might be the team to win. But when you're a student with less entrepreneurial experience, what is it that you uniquely bring to the table that no one else does? Is it a perspective? Is it an experience? Etc. The So this is sort of how I would lay it out. And notice milestones. We're going to come back to that, but that is so important. Um, it's so important to specifically convey when you're raising capital why you're raising it, not just use of funds like, oh, 30% marketing, 40% team, whatever it is, another 30% on R&D or product development. That's good and fine and dandy, but I really want to know you're raising capital because you want to get from point A to point B. And what are those points? Tactically, though, if you're heading in to discuss investment with another investor, you probably need an exec summary, financials, and a presentation. I just think that's the baseline, what you need, and you don't have to give that to people up front, but it should be handy. Um, Financials, keep in mind that at least my personal impression is that, and I'm sure you've heard, financials are more art than science, but taking one step past that, financials should really be an extension of your story. So what I find troubling and what I'd recommend you gut check yourself on is when you've got a story you tell that looks like this and is clear and concise and you're raising capital to go from point A to point B, and then you build out a model that's totally disconnected and disjointed from that story. And you've got it growing at different rates and different years, and you're gonna hire, a bunch of salespeople because that actually makes the model grow faster. But at the end of the day, when you tell your story and you talk about the customers you already have today, they've all bought it organically off of your website. So why are you hiring salespeople? So make sure that the financials tell a story. I think most investors at the early stages care less about uh, where's revenue going to be in year three and more about what are the assumptions you're making in that model. Presentations are key, though. That's one thing. I think this is sort of new to the venture world, frankly, with the rise of demo days and everything else. But it's kind of how we are operating today. And so getting your presentation down, I wouldn't underestimate the value of getting that first impression right, and really cutting through the noise and not just being polished, like, oh, I walk to the right and then I walk to the left and then I pause and I have great pronunciation, but really nailing the milestones and the funding and the vision in a way where you're conveying that clearly to those in the audience. Um, I won't speak too much to this, but I think the point of that telling your story, we laid it out, and everything that was highlighted in orange is a section you can kind of take out a slide in and of itself. So you've got your short version of the story, and then you can use that to build out a slide deck from that. So team leads into a problem. How do you address that problem with your solution? Ultimately, that solution is going to get deployed into a market based on other competitors. You might be competing based on a differentiated business model. And ultimately, what are the milestones you're trying to achieve with this ask of financing? Um, that's a nice natural flow. Every company is different. Every pitch deck is different. But if you needed a framework or a skeleton, this would be uh, a good one to use. One reminder, just use a demo if you can. A picture's worth 1,000 words, especially when it comes to software that sounds hard. You can't bring the product in and physically touch it. But if you can run me through a demo and you're really talented on product and design, I want to see that. I want to understand that and feel that. Um, that can be a big differentiator in the early days when it comes to really finding product market fit. A lot of times that organic demand that you're achieving, where it's getting pulled off the shelves, if you will, is because the product's so easy to use. And then don't be afraid to use an appendix. I have got a huge one in this deck. I want to be able to be ready to speak to things that you have a question on, but I also don't want to overload you and lose your interest level based on way too many slides. Just as a frame of reference, right? If you have an hour-long meeting with an investor, the recommendation might be to do 20 minutes worth of content and the rest an appendix. You really want to have a dialogue. You want to have a conversation because you'll end up, every investor will probably have different questions and go down different routes, and you want to be able to go there with them. Try not to copy template presentations. We kind of put these in here in case you're looking for a place to start. But feel free to just really tell your story organically as opposed to trying to fit it into somebody else's story. But these might be templates if you really need something to jog your ideas there. Use some milestones. So I'll kind of fly through this and leave room for questions. But I want to spend most time on this slide and then we'll stop. So when we think about how do you tell your story, it's not just about the tactical pieces of having financials in a model or having an exec summary and how do you lay the slide deck out. It's really sitting down with your team or with yourself and understanding what are the key milestones for your business. As one founder put it, what's the major target for you, whether it's a certain amount of active users on the platform or transactions per week or per month, and sprint toward that. I mean, just sole focus, sprint toward that. I think most of what you'll see here on milestones on the left side of that chart is not revenue. I think too many people get caught in, I'm just raising capital to get to $1 million in ARR to raise my Series A. Well, what does that mean? What does $1 million in ARR matter for? Beyond just, well, it'll attach a revenue multiple to that. It'll get me to a valuation. And based on the dilution, I'm willing to tolerate blah, 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 and the amount I want to raise. Much more important than that is where are you in terms of achieving that product market fit, getting a scalable model, and then ultimately raising capital for growth. And these are the progression that it typically takes. The naming, the nomenclature of rounds has actually taken on more of an indication of where you are in the journey of building a business than it has just chronological, which is what it used to be. So this is not perfect, right? Plenty of people raise Series A's when they're back at evidence of product market fit, but that's where these shades of gray come in, right? If you're in one spot and you're raising, it's going to be easier or harder depending. Last point to make here is as you think about valuation, just understand from the investor standpoint, the key to raising valuation is reducing risk. And oftentimes reaching these milestones are big risk inflection points and therefore value inflection points. And so even though we've got this line here that's perfectly linear up and to the right, most valuations don't follow that, right? It's sort of also the value of the company is what the market's willing to pay for it. It tends to look more like the step function on the left, where you've reached a certain milestone and you've reduced risk in the business, and so your valuation is higher. And again, I'm talking milestones, not revenue. So, you hit 2 million in revenue, all of a sudden your valuation is much higher. If you followed that logic, it would look linear. Our logic, at least at Tech Square Ventures, is much more milestone based. And I think that when you're living in the business, it probably feels that way too. You're working, and then you hit a point where you go, wow, I think we've achieved the next level. I'm going to pause there because I want to field questions and we can come back to finding the right investor if we need to.